Hi there, welcome back to Dukascopy TV. I'm Ben Jones. China released their final GDP figures for 2014, so on the line with me to discuss what 2015 might have in store for China is Duncan Innes-Ker from the Economist Intelligence Unit. So first of all, Duncan, I'd like to look at the GDP figures, 7.3%. This is the slowest growth for China in a long time, but would you say that this has been expected?
Yes, I mean, the slowdown in growth is very much part of a wider picture in which we see some underlying factors such as the slowdown in the size of the workforce. The workforce in China is actually shrinking at the moment. But it's also a reflection of the fact that growth was artificially boosted in recent years, and as the government's trying to rein in leverage and things like that, that's resulted in the economy slowing in recent months.
Now, moving on to retail sales and industrial production, these figures were both relatively strong. So what's caused this?
I think there are a number of factors behind this. The first is that we need to remember that income in China is still growing at a fairly rapid clip. So actually, in terms of the consumer picture, it's still a relatively strong one. Services and retail sales as a whole are performing much better than some other parts of the economy, particularly investment, where there's been perhaps a degree of overinvestment in recent years that needs to be corrected for. So the retail sales number I don't think was particularly surprising. We've seen strong car sales and so on, so that's a reflection of what's going on there. The industrial production number was much more interesting because that's been an area that has really seen a direct knock-on from the slowdown investment in property and so on. So the fact that was relatively strong is really the positive surprise in the latest numbers.
And finally, what do you expect for China throughout 2015? The World Bank have predicted growth of 7.1%. Do you think this is likely, and would China be content with this?
Well, we're expecting growth of about 7.2% this year, and we've actually been revising upwards recently, and that's partly a reflection of the fact that China's a massive oil importer, and with the big drops in global oil prices that we've been seeing recently, those will provide a bit of a lift to the economy through 2015. So it's likely to perform slightly better than we had expected previously. But 7.2% would still represent a slowdown compared with last year, and that's again the story that the government is trying to rein in that credit bubble that developed in recent years, and that's a process that still has quite a long way to go yet.
Duncan, thank you very much for joining me today. That's all we have time for now. Keep clicking back though, as we have plenty more in store for you this week. Bye for now.